the mantra for 2024 amidst predictions of a bear market or a bull market, both will miss the mark this year. In 2024, success will hinge on stock selection, with most gains driven by a select few mega capitalized companies. If you find yourself in those companies or sectors, you're poised for a good year. Notably, last year, significant gains were elusive for those not invested in the Magnificent Seven. If you follow our recommendations the last few weeks and the last year and a half, investing companies like Nvidia, Amazon, Meta, etc., you were greatly rewarded. It all boils down to stock selection this year, this week, and this month. It will be no different. Last year was an easy year if we're going to compare it to this year. Debunking the myth of calling the end of the bull market. In this latest video, we're going to dissect the complexities of the market predictions while acknowledging that gains might not match last year's levels. We emphasize the importance of a nuanced approach, diving into the evidence that suggests a downturn, examining the individual indicators like overbought signals and sentiment indicators. We use what's called a weight of evidence. And yes, many pundits are right. There are many overbought indicators telling you to short this market. There are many indicators telling you, sentiment indicators telling you we should go down. And they are right, but not this year. There are many indicators telling us that the select few mega cap companies will hold up this market. We are going into an election year. This will not be a down year this year. We challenge the simplicity of such predictions of people just choosing one or two indicators, as we want you to have a multifaceted nature of market dynamics with many indicators. Today, we will have thoughtful analysis that go beyond the typical pundits' predictions and give you reasons why to buy certain companies on the dips, even though we are overbought in this market. If you find this video helpful, please subscribe and hit the thumbs up button. Insight of the stock market, the mantra, February 12th, 2024. Before we get started, disclaimer: the information provided on our channels for educational and informational purposes only and is not intended to be a substitute for professional financial advice. What do? The first thing we want to concentrate on is on a top-down approach. We want to look at the bigger picture and decide where we are inside the stock market. I know we are in a bull market. I know for the last 1 year and 2 months, the overall averages are moving higher. This is a bull market. Now, you could say we are overbought on this bull market, but each time we have sold off, we have been met with buy-in. And unless we reach capitulation on a sell side, the best formula is to buy on the dips. When companies are reaching 52-week highs, we are more confident they will go higher. They may pull back, but they will go higher. Our trading edge is over 100 indicators where we use a weight of evidence. What I am looking to accomplish is high probability investing or trading, and I am consistent. We use a rule-based system, empirically, theoretically, and psychologically. You can look a little bit about how you build your own rule-based system in one of our videos. We told you that one indicator does not make a strategy. One indicator does not make a system. One indicator you should not rely on and say that we are going lower and to short into the market. We strongly feel that shorting into overall indexes at hitting yearly highs, 52-week highs, or all-time highs is not a good process. It's not a good system for us. Until we reach capitulation on the top side, we will be looking to buy further on pullbacks. Obviously, short term, we are overbought in this market, thus saying that we are not shorting into it. Even intermediate term, we could see a significant pullback from these levels, but still, the long term for this year is bullish. I want to go over a rule-based system with you today. I want to first start with stage analysis. Where are we in stage analysis? If you look at the S&P 500 securities, 52% are bullish, 48% are bearish. For the NASDAQ 100, 51% is bullish and 49% bearish. So we're barely etching out a bullish stage analysis, which shows we're more on a distribution phase and topping out than a declining phase or even a growth phase. Last year, we accurately predicted the Magnificent Seven would lead the way. This year, it's going to be even harder. Last year, we had an initial buy on January 18, 2023 at 284. Every single video we came out since last year, we've been telling you to buy on the dips. And just our long-term portfolio is up 52%. Nothing has changed for us other than the number is a lot higher every time we do a video. And even though your emotions are saying we're overbought in this market, a pullback will happen, and that will be the opportunity to buy for at least this year. When do we buy? Well, first of all, we buy when we're in bull markets. Not every year is a bull market. In 2022, we were short the market. That was not a bull market. But if you look at this chart here of the QQQs, the spiders, New York Stock Exchange, it is clearly on an uptrend. This clearly says that we are in a bull market. So if we are in a bull market, we're not shorting. We do use oversold indicators, and some oversold indicators are bearish. We avoid cheap tricks. The company that is trading close to their 52-week lows or have not done very well recently, we are not buying in it. And you can see the QQQs have been doing very well recently. We prioritize uptrends. This is clearly an uptrend. We have stop losses. Not only that, but we have studied changing of tides in bull markets, and we're not there yet. But thus saying that, this is a very selective market, like 1977, where you need to be a stock picker and follow certain rules. We most importantly want to maintain consistency. We don't want to change every day our rules, what we're looking at, or because one indicator turned severely bullish or severely bearish. We want to keep our rules. In 2023, we had a bullish recommendation crossing 284. Every video we have done since then has been a bullish indication. And this one we're coming out with today, nothing changes, except we're telling you if you're lucky enough to get pullbacks to 400 to 405, it is a good potential to enter in the QQQs. The gains will not be as good as last year, but there will be gains on the QQQs. But what is a problem? There's a problem on the euphoria of the market. If you look at the VIX and the VXN, there is no fear in the market, thus driving people to short, thus driving people to say that nobody is fearful in this market and this market will sell off. Thus saying that sentiment indicators can stay bullish for 1 to 6 months before you expect what to happens. If you look at the 50-day moving average for the VIX, we are neutral. Thus saying that if you look at the contract itself, it's clearly saying that we are going to sell off, but a short-term sell-off, not an intermediate term, we feel, based on presidential elections, historical data, and the January effect. Our short-term indicators clearly are coming close to the 100 level. And by the end of the day of filming today, these numbers will be higher, which is telling us short-term we're supposed to have a pullback. Just because we're supposed to have a pullback does not mean we get this pullback. The plan is when these numbers hit 0 to buy into positions, but because we're in a bull market, the plan is when these are at 100, knowing that pullbacks will be slight. We're also looking at our commodity channel index CCI, and we're really going to be looking for this to tell us when to get into the market. And when this number goes to 0 and then pulls back up each and every time, it helped us time the market. And if we're lucky enough to see a minus 200 sometime this year and then a pull up, this will be a perfect opportunity for us to get in further. As we told you, short term, medium term, and long term, and our exit swing signal are all telling us we are overbought in this market. But what I think is going to happen, overbought will become a lot more overbought. And the people who are saying short into this market that we're topping out will be disappointed. Thus saying that I will not always be bullish. There will be years that I turn bearish, but this is not the opportunity when you're hitting 52-week highs. If you look at our components, is very neutral. We'll be looking to buy in when this number hits 25, which we'll be releasing on our videos. We've been a big Magnificent 7, but there's starting to be some holes in the Magnificent 7. In Tesla, which is on a declining phase, and Apple, we're looking to which direction is going to turn. But still, with Amazon, Microsoft, Google, NVIDIA, big NVIDIA, and Meta, this Magnificent 7 still looks to progress further. All these securities we've had in our long-term portfolio. Why are people very concerned? Because it's not all roses. If you look at the AAII market sentiment ratio, it is clearly bearish. But we can pull back a little bit and then go up higher. But this is clearly a bad sentiment where you have the VIX euphoria, the AAII clearly bullish, which means bearish. You look at the put-call options ratio, and that is clearly at extreme greed, which means bearish. And then you go to the stock price strength ratio, which is bearish. What has worked very well for us recently has been the RIDEX ratio, which right now short-term is still showing us a little bearish, but not at extreme levels. All this is we're building a weight of evidence. And it's not a perfect like it was last year. But if you believe governments have control over the stock market and you're going into an election year, and I am not a Democrat, I am not a Republican, I am for you to make money. They will keep this market up, the overall indexes. As slightly as it will be, the market will be up this year. You also look at coming off capitulation. Each time we come off capitulation in every single bear market, we have successful runs for sometimes even over a year, as we predicted last year. The question is, what stocks do you get in and when do you get in? We have our long-term portfolio open for over a year and 1 month. We are hoping for a sell-off so we can get involved more in the intermediate term and the short term, but we will not force it. We will have plenty of time to make money this year when there's a high probability chance of succeeding. So we are bullish, but we will be even more selective with stocks than we were last year. Next video will be about certain individual securities that we have held on to for a year and 1 month and new securities that are breaking out. You know the catchphrase, study it, analyze it, adapt it. Peace.